Ever wondered what a gold ETF is? Well, you're about to find out. Gold ETFs, or exchange-traded funds, are a unique financial instrument that have gained popularity in recent years. In essence, they are a type of ETF that tracks the price of gold. But what does that mean? Simply put, the value of a gold ETF moves in tandem with the price of gold in the global market. Much like regular stocks, gold ETFs are traded on the stock exchange. This means that investors can buy and sell shares of a gold ETF just as they would with shares of a company. It's an innovative way to invest in gold without having to physically own the precious metal. So whether you're an experienced investor or a beginner looking to diversify their portfolio, gold ETFs offer an intriguing option. Understanding gold ETFs can seem complex, but it's about to get a whole lot simpler. So what exactly does it mean when we say a gold ETF tracks the price of gold? Well, it's pretty straightforward. A gold ETF, or exchange-traded fund, works by buying and holding gold. The ETF owns this gold on behalf of its shareholders. That's you if you buy shares in the ETF. Now here's the beautiful part. The price of the ETF shares fluctuates with the price of gold. So if gold goes up in value, so does your ETF, and vice versa. This system allows investors like you to gain exposure to the price of gold without having to buy, store, and insure physical gold. So, you're essentially getting all the benefits of owning gold without any of the hassle. Think of it this way. When you buy a gold ETF, you're not actually buying gold. No, you're buying a share of a big pile of gold. In essence, when you buy a gold ETF, you're buying a share of a big pile of gold. Now, why would someone want to buy a gold ETF instead of just buying gold? The answer is quite simple, and it lies in the advantages that gold ETFs bring to the table. Firstly, gold ETFs provide liquidity. This means you can easily buy and sell your gold ETFs during market hours, just like you would trade stocks. You don't have to worry about storing physical gold or finding a buyer when you need to sell. Secondly, gold ETFs typically come with lower costs. While buying physical gold may involve additional costs such as storage fees and insurance, these are generally not an issue with gold ETFs. You simply pay a small annual fee, and the ETF provider takes care of the rest. Additionally, gold ETFs give you the ability to buy and sell at any time during market hours. This means you can take advantage of price fluctuations throughout the day, potentially making gains from short-term price movements. Lastly, gold ETFs can be an excellent way to diversify your portfolio. Rather than putting all your eggs in one basket, so to speak, you can spread your investments across different asset classes. As gold often moves inversely to stocks, a gold ETF can help to balance your portfolio, potentially reducing risk and smoothing out returns over time. So, gold ETFs can offer a convenient and cost-effective way to invest in gold. And with their many advantages, it's no wonder why they've become a popular choice for many investors. But as with any investment, there are risks to be aware of. Just like the ebbs and flows of the ocean, the price of gold can go down as well as up. Gold ETFs are not immune to this volatility. While it's true that gold has historically been a safe haven during economic downturns, it's also susceptible to market forces and can experience periods of decline. Further, gold ETFs are subject to management fees and expenses. These costs can eat into your returns over time, especially if the price of gold remains stagnant or decreases. So it's essential to factor in these costs when considering an investment in gold ETFs. Moreover, it's important to remember that when you invest in a gold ETF, you don't physically own the gold. Instead, you own shares in a fund that owns the gold. This means you're dependent on the fund's ability to manage its gold holdings effectively. In summary, gold ETFs offer a convenient way to invest in gold without the need for storage and insurance. They provide exposure to the price of gold, and can serve as a hedge against inflation and economic uncertainty. However, they also come with risks including price volatility, management fees, and the reliance on the fund's ability to manage its gold holdings. So that's a quick look at gold ETFs. Remember, every investment decision should be based on careful research and consideration.